In this video, I'm going to show you how to create a trade plan based on news announcements using the FXT Economic Calendar. I'm here in the FXT Economic Calendar. It's got the Economic Insight tab, and what I can see here is we've got the date, today's date, and then all of the events. I've filtered out the high impact events, as you can see, and economic events. I don't really care about the holidays as such. It's the economic events that I want to see. And what we're going to do is dive deep into what this economic calendar can tell us about previous events and potentially the upcoming event, so that we can perhaps find and identify a trade setup that might give us a bit more of an edge in the market and be able to navigate our way in and out of the trades at the time. So I'm just going to use an example that's coming up. I'm just going to pick a random example and show you how easy it is to, I guess, work out if there is something that you can trade or not. I'm not particularly a fundamental specialist. I understand the basics of it, and unfortunately what happens is in the real market, in the real world, just because something is bad doesn't mean the market's going to go down. And just because something is good doesn't mean the market's going to react as you might expect and go up. There are increased volatility patterns, and what happens is the market jumps around. So it's about trying to understand the patterns and the framework of how the market moves up and down in a short space of time, so that you can get in and out of the market and trade it. Now, obviously, these changes have an impact longer term. So for those fundamental traders out there that are looking for those bigger swings, hanging in trades for weeks or months, this video isn't for you as such. It's more for those traders that are looking to get in and out of the market around the time of these announcements. So let's get into it. We've got a JP, Japanese flag here, at 1600 or 4 o'clock, consumer confidence of January. Now this is listed as a high impact example, and we've got the actual, forecast and previous. Now as you can see, there's no actual, but there is a forecast and a previous, and it's showing that it's fairly close to the previous in terms of the forecast. We're not expecting a huge jump, and we're basically just going to wait for this 1600 time to show up and be ready at our computer and be able to trade that market when the actual data is released. Now, what we can do is dive in, plan out a trade that we're expecting and hoping for, and then watching the live market later on to see what actually happens. So we'll go event chart to start us off. It opens up, it gives you a bit of a bar chart of what's happened previously. Now, the yellow indicates the forecasted amount, while the purpley blue bar indicates the actual. So as you can see, it's 37.2 was the actual. It was higher than the forecast, and this is where you're going to get a feel for what you're hoping to expect. Now the last three announcements, the key point that I'm taking from this chart, the event chart, is that the previous announcements have all beaten the forecast. They've all gone higher than this yellow bar here. So what I'll be looking for in the actual announcement is questioning what the data has returned. Is it higher than the forecasted amount, which we saw is 37.8? And each of these have increased, so we're always going up compared to the previous, so that's in line with what we'd expect. And if we got a higher actual, so let's say the actual is, so we've got the forecast is up here, the actual would have to be even higher. We've got a very similar layout to these three last patterns. If, however, the actual came back and it was lower than the forecasted amount, such as the August, September, and then back here in June, we're looking to see, when we look at further charts, is we're going to map out two trades. So is the actual going to be higher or lower than our forecast and our previous? And using these event chart bars to kind of map out what actually happens in each scenario. So we've got a below forecast, on 3 bars that are quite recent. And then we've got an above forecast on the last 3 bars that we've actually traded. And I'm going to now dive into the next step. So we've got the price chart here. I'm actually going to ignore this just for the moment. I'm going to go over to volatility. So we're in volatility. Now we can remember from the event chart that the last 3 were above the forecast. So if we get anything higher than a 37.8, we're looking at these 3 bars for similarities. We're just trying to identify what we can find in the markets. So we've got above forecast, and in 15 minutes, basically that drops. Now we can go to a 4-hour, and then after 4 hours, the market actually rises from the point in the event. So 5 minutes, 15 minutes, and then 30 minutes. Now, what I can identify from particularly these 3 bars in the event the actual is above our forecast, we've gone down for the first 15 minutes, so 5 to 15 minutes, and then what happens in the next period of time after that, they all end up positive over that period. So 58% ended bullish. Now these 3 in particular are what we're looking out for if the data is above the forecast. So actual above forecast, you can see they're basically all green after 4 hours. Now this one's a bit of an anomaly, but the rest were all lower in the first 15 minutes. So in the first 15 minutes, you're waiting for a drop, or you could potentially short the market. You're waiting for it to drop and then looking for an opportunity to get long. Now, why are we looking for an opportunity to get long in this case? Based on the analysis purely, this is not a trade advice or trade analysis in particular. It's just a general overview of the things I look for when I use this economic calendar. So from 15 minutes to now the 4 hours on the US dollar yen, the market went from down here to then up here. So that indicates a potential buying opportunity. We can also see actual above forecast after 4 hours on the US yen, 83% ended bullish. So you've got 5 to 15 minutes to get long. So you're waiting for a bit of a pullback perhaps. And then 4 hours later, you're expecting to go long. Now you can do this for the euro yen. It'll come up with different information. The CAD yen, and you're going to get different insights. And it's about trying to find what pair actually has the most potential for this particular announcement. So each announcement is going to affect different currency pairs quite differently because of the global implications that it might have, and the imports and exports and the business relationships, and potentially the political side of things as well. So you're going through, now we're going to go back to the US yen because we've already found a pattern. We're just going to use this for the example. I just wanted to show you that there are other currency pairs that you can search through and do this process with. So from this insight, if the actual is above the forecast of 37.8, we're expecting it to drop a little bit and then go long for the following 4 hours or thereabouts. On the flip side, actual below forecast, we can see here that after 4 hours we're looking for mostly shorts. So it goes down, the US yen actually decreases, but we also want to check what happened in the first 5 minutes. So if the actual is below 37.8, in the first 5 minutes, the market tends to rise. 15 minutes is a little blurrier, but the first 2 rows. 30 minutes after, and we're starting to form a bit more of a trade. So in 5 minutes, we expect a push up. In this scenario, actual below forecast. So a push up in the first 5 minutes. Have a look at the 4 hours, and then over the period between the first 5 minutes and then the next 4 hours, the market tends to drop. So using the forecast versus actual filter, we can clearly see what happens at each time interval following this event. So it makes it quite easy. So 80% ended bearish. It makes it very easy to map out a bit of a plan, at least. So rather than going in blind to these trading events and expecting to just use your wits and your skill in understanding how the bar charts work, the candlesticks and that kind of thing, watching the footprint, which I talk about in some other videos, using this as an analysis tool to identify what could happen based on the information that you're given at the time of the event, and having it written down to say, right, if it's actual below the forecast, we're looking for a short, but we're expecting in the first 5 minutes, by changing this around, that the US yen will go up slightly and then fall over the following 4 hours. Now we're going to look at the price chart and have a bit of a look at what happened. So had a big rally. Sometimes you can identify a bit of a pattern as to what's happened in the last few, but we've come up, we're on our way down, and then we're on our way back up. So it was a bit flat here. We're kind of seeing a bit of, I guess, continuation from what was already going on. So that's come down, that's come up, and perhaps this will be a flat one just like it was a little bit here. Look, you can read this one how you like, and sometimes you'll get some insight from it and sometimes you won't. In some events, you might see that at each top and bottom, the market is really affected as a long-term trend by these events. In this case, it doesn't really look that clear as to a particular direction that the US yen follows following this particular consumer confidence announcement. It's not as impactful on a longer term space. It seems to allow for continuation in the recent events. So if it's going up, it continues up. If it's going flat, it kind of remains flat. This one here is an anomaly. Obviously, it goes to the highs and then drops. So you might want to, for example, check out what forecast versus actual and the numbers behind it that affected this particular move, because if you've come up to a similar situation, that might be really important. So looking for other patterns can be quite helpful, and you can actually scroll down this sidebar and see what happens. So 37.1 versus a 36.8 forecast, actual higher than the forecast, and then we saw a big turnaround over that period. The volatility though is really the biggest help in mapping out your trades. So above forecast, over 4 hours we're expecting to go long. If it matches it, we've only had it once in this period, and below we're expecting it to go down over this 4 hours. And then where the magic happens is, what's the first 5 minute spikes? Can I look for an opportunity to get a better fill than just blind buying or selling at that first announcement point? So you're waiting for a bit of volatility to take you in the opposite direction of each of these trades, below or above. And what you want to know is what that data is versus the forecast. And then that will give you a direction of either below or above to go long or short. So 4 hours after the event for below, we're looking as a general rule of thumb to go short. Actual above forecast as a general rule of thumb, we're looking to go long. And then you're using these other time frames to kind of map out a little bit more of an edge as you can find it. Now the impact chart, it's quite helpful because you actually see the bar chart and how it plays out. So you can see here the most recent event, it kind of came up, well it dropped, came up a little bit and then dropped further. So this is a 5 minute chart. So for about half an hour after the announcement it dropped down and then had a massive rally for about an hour, and it was just green the whole way through, or depending on how your charts are set up, just positive bars for the next hour. And you probably could have obviously got out somewhere up here, up above your entry, even if you got in at the open here and you thought it was going to take off. but using that analysis to experience and wait for that drop, that first 15 to 30 minutes, and then push higher. So the impact chart shows you what happened. Just because it finished here at the 4-hour mark doesn't mean you have to hold it for 4 hours. In this case, it would have been better to close the trade within about 60 pips. So if you waited all the way down here, you got in somewhere at this point as it started to build a bit of strength at these bars here and then turn around, you might have been able to get sort of 40 or 50 pips out of this particular setup. We'll go to the previous event now just to show you what it looks like. So going back one more, we dropped, kind of came back up. You would have taken a little bit of heat around this period here. And you can obviously map out your time so you know what to expect in a sense of historic similarities. So you're expecting a drop and then you're expecting the market to go higher. But you don't want to necessarily hold it for the full 4 hours. You want to look for an opportunity to exit that position according to this impact chart. I'm going to go back one more just to show you once again. In this situation, it held very flat. We didn't get too much movement. I guess it eventually drifted upwards, took a bit of heat here potentially, depending on where you got in. But overall, if you had have bought, then you would have probably been okay. Now we're going to step back into a different scenario. So the actual was below forecast, and as we can see, the market went up a little and then dropped. So the actual above or below the forecast really has an impact according to these charts. And it's really good to know because as soon as you have the actual versus the forecast, the actual data will kind of indicate to you on the particular pair that you've researched whether you're expecting the market to go up or down over the coming 4 hours. And these additional tools, the impact chart, can guide you as to what you might expect the chart to look like and how long you might need to be in that trade to actually reach a point of profitability for that position. You can do this for all of the high impact announcements, and in particular if you've got a preferred setup or symbol that you like, you can filter it and only look for those ones that you really want to trade. And you can map out and write down what the expected outcomes are for each above or below the forecast. And then when the data comes out, you'll be able to quickly identify whether the market should, based on historic events, go up or down. I hope that really helps you gain an understanding for a bit of the fundamental but slash what happens to price idea, and how this tool can actually really help you better prepare for these news events and be ready for what the market is about to throw at you. To get access to this tool, you can jump onto the link below. You need a live account to actually access these tools. So if you want to jump in and get a live account, you can, but you do need it to actually access these calendar insights from it. Please hit the like button below. It lets me know this is helping others. To see more great content like this, please subscribe, hit the bell icon, and stay updated with the latest.